So using a stop loss at first feels like infringing on our freedom. Additionally to the fear of losing money, it's the fear of losing the prop account. So there's an additional fear that is being introduced into an area that is already uncertain, that is already triggering a lot of our fears. Most traders lose money in the fear of losing money and trying to avoid losing money. Yeah. It's the same in relationship. Most relationships don't end well because one of the partners has the fear of losing the other partner.
What's up, guys, and welcome to another BullRush interview. My name is Davin Spurrier, and I'm thrilled for today's guest. Please welcome Mandi Rafsendjani of tradingpsychology.com.au and highperformancetrading.com.au. She's a true expert in the world of trading psychology and trading mindset. With over 20 years of experience in the financial market and coaching, Mandi has helped thousands of traders worldwide level up their mental game and improve their performance. Mandi, it's a pleasure to speak with you today. How are you doing today?
Thank you so much for having me, Devin. I am so excited to speak to you today as well. When I saw that Trent is starting this new venture, BullRush, I was like, wow, this is really, really interesting. So now we get to talk about it. I'm just super thrilled. I think you guys are onto changing the industry for the better. Yeah. Can't wait to chat more with you about it.
Awesome. Yeah, no, when I first found out about BullRush too, I was shocked. I never heard anything of it. I've just dabbled a little bit in day trading with crypto in college, and that's where I started, and stocks a little bit here and there. When I found out about BullRush, I was like, wow, it's next level. And then when I found out about you, I love the psychology and everything. I think this is going to be a really great conversation. So, Mandi, Can you tell us a little bit about yourself and how you got started in trading? What was that drive that made you want to get into trading? I always find it interesting to hear.
Yeah, this is really funny because I never saw myself as a trader. I knew I had my talents and my strengths, but they weren't in numbers and finances. That was my self-image. I had a very, very poor self-image. And when I came to Australia, I came here because of a man, as you do. And so I felt so lonely because I didn't know anyone. I had lived in Hong Kong before, and Hong Kong was bustling, and I had my own business, and I was someone, And then I came to Australia, and I was like nothing. No, it was very humbling.
Yeah.
And so I was looking for ways to meet new people. And then I saw this little flyer on the wall in the gym that says, come to a night of success with wealth creation. Hey, maybe I meet some people there. I had no idea what wealth creation was, right? It was a completely new concept. And so I went there, and that was my introduction into a completely new world. And then I signed up for a seminar, which was called the Wealth Accelerator, a 3-day seminar. And the seminar was about property, business, and trading, options trading mostly. But what turned out was that these guys said, well, if you don't know how to do it yourself, give us your money and then we do it for you.
We see that
you
a
can
lot.
see. Yeah, it still happens nowadays, right? That's why I'm sharing this story, because number one, I was so naive. I was so trusting. And number two, I had so little self-esteem. I didn't think I can do it myself. So I gave my power away to other people. You can imagine how the story ended. There was heaps of people who gave them their money. I only had, 10,000, thank God. And I know someone who gave them $1 million, and then they ran off to America. So that was in 2002. A company who had organized this event, they said, well, we are really sorry. It was break-free events, funny enough. They said, we are really sorry. We can't give you your money back, but you can choose any other seminar and go there. Making up for it a little bit. The only seminar left in the year, of course, was options trading. And I thought, well, I don't have any interest in trading, but at least, I get something for the money that I've lost. Mm-hmm. And so that was my introduction into the wonderful world of trading. I got hooked, and it was July. I remember that. And I came home and I said to my partner, oh, you know what? We are going to be rich by the end of the year. I'm going to buy you a Ferrari.
Yeah.
You know how that story ended.
I think we all had similar ones. I mean, you said you joined a seminar in college. I said I started trading crypto. exactly the same way. I joined a seminar. It was a one-day
Wow.
seminar, but it was on, I think it was on just trading in general, so trading crypto, Forex, and
Yeah.
stocks. And yeah, and it was a whole, it was probably, I think, like 4 hour long seminar, sat through the whole thing. And then at the end of it, exactly like you said, they pitched us on, well, if you give us the money, we can trade for you, or you can join our private group and we'll give you the signals and the course and
Yes.
all that. And that was before I learned about baby pips. So I was like, oh, they're the only ones who can teach me this stuff. So, I didn't have, I
Funny.
mean, I was broke in college, so I didn't even have 10,000 to give them. So I think
Yeah.
I invested maybe like 1,000 or two into them. And of course, just like it usually happens, it disappeared. And the excuse was, well, the markets aren't good. This is blah, 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 blah. But
Yep.
if you buy our next seminar, we can teach you how to
Yeah,
make it through
exactly.
bad markets. And I didn't fall for that, but I just tried
I
to
did,
at that
Devin.
point.
I did.
Yeah, I was just at that point. I mean, I didn't have any more money. I was paying my way through
Yeah.
college and everything, so that was the
Wow.
only extra money I had. So at that point, I made a few friends from that seminar and in college, and I went to school for economics, so I had some friends who were trading in some of my classes, and I just kind of tried to learn from them and day trade a little bit here and there. And I exactly like you said, my girlfriend at the time, who's now my wife, I came home and I was like, babe, we're gonna buy a mansion next year. Like, let's go to Italy. Like, give me 6 months, we'll go to Italy. We'll go to, this place, Ibiza. Like, we're going to go on these trips and stuff. And then I did my taxes at the end of the year, and I got my, all my investment, tax forms and stuff. And I was like, wow, I suck. I was like,
Yeah.
maybe I shouldn't put all my eggs in this basket, and I kind of took a back end approach and just
The
learned.
sobering
I just took
moments.
some, sobering moment when I looked at my taxes, and I was like, that's how much I lost. Jeez.
We have
And
all these ways of deceiving ourselves, and I think this
mm-hmm.
is just human, and it's a skill to then learn to be realistic. So, and taxes force that onto us. So who says taxes are bad, right? So
Yeah, exactly. No, if I didn't have to do taxes that year, I would have thought I'm making 1 million a year, and I would until I went to go pay for that trip to Italy, and I'm like, oh wait, my bank account isn't that high.
too funny.
Yeah.
And it isn't amazing your wife still married you, so you must have done some things right.
Because I stopped
You
doing
stopped and you found a better way, huh?
yeah, well, I started a business. I
Yeah.
made money, but and then actually working, and I learned. That's the biggest thing is you never,
Yes.
you can't. Ego is a big thing, I think, in trading, and I think especially with new traders, and this kind of goes into my next question is, a lot of people, and me personally too, is they get into when they first start trading, they find one little tool or one little method that maybe works for a little bit, or like we said, it doesn't work most of the time, but they do have some big wins.
Mm.
And of course, BullRush, we have tons of brand new traders. So, what is one of the things that you see people need the most work on regarding trading psychology, whether it's emotional intelligence, discipline, decision making? What are some of the biggest mistakes you see brand new traders make when they first start trading, get into the market?
Wow, where do we start?
A
I
lot. We
think
already
it's
talked about a couple of them. So,
yeah, it's it's the excitement that starts us off, and it's the new world of possibilities that we're being exposed to. It sweeps us away, and we are not able to think clearly anymore. Now, there's several different types of traders, right? So there is not just the ones who get swept away. If we were to do a disc profile, I'm a certified disc profiler, DISC, if someone wants to Google what disc profile is, we can already identify that the ones who have a high D portion, the dominance portion, which are the facts and figures focused people, they wouldn't have the experience that we have. I make an assumption. I think you love people as much as I love
mm-hmm.
people. So we would be, generally speaking, again, making an assumption here, more emotionally driven, more kinesthetic. We are the kind of people who get swept away, who trust other people without checking the facts. Now,
Yep.
once you have had that experience, you learn and you start trusting people whilst checking the facts. Let people prove to you. So, if someone would say to me, invest, give me your money, I invest for you, I said, great, I'm really happy to do that. Show me your last 10 years of trading statistics. Show me your audited reports. And then, I
Hmm.
might consider it. That wasn't available to me at the time. I didn't have that thinking. So that's what I found with new traders. The way of thinking that we need in trading, we have never learned in our normal life. And that's what's lacking for them. So it's just like a skill lacking for them.
Yeah.
So, for example, keeping our statistics, knowing how to read our statistics, what does our profit factor mean about our trading, and so on. That is a learned skill, and that's what many traders forget to do. Many newbie traders, they are focused on finding a great entry strategy. They're a little loose on their exit strategies because let's, be honest, getting into
Hmm.
the market is much more exciting than getting out.
The amount of people that I just see don't even use stop losses amazes me.
Yeah. Yeah, I was the same. I didn't use stop losses because again, the type of person the finance industry attracts is usually people who love independence, who love freedom, who want to build something big. So using a stop loss at first feels like infringing on our freedom, right? So it could also be something much deeper where, it's the fear of being controlled and so on. But let's just keep it, light because it doesn't always have to be something deep and dark. Impinging on our freedom. I'm in the markets to have freedom. So don't tell me what to do. That could be one reason where it's time to grow up because this is really a childish way of looking at life.
Yeah.
And so that's one really big topic to start off with. What are the themes and the topics and the skills that are unique to trading that we haven't learned in our normal day-to-day life, like risk management? No one taught me. I studied business, Devin.
Yeah.
I didn't learn risk management. And good, okay, that
I
was,
was in the business
decades ago.
program too, and they never really talked about risk management.
Yeah, yeah. So then shifting that and learning that my stop losses, they're my best friend.
Hmm.
And so now take that into everyday life. What I see a lot of traders who hate stop losses do in their day-to-day life, they hate routines. They're messy. Like one big breakthrough for me was something simple like when I wash socks. So my partner at the time, he was an athlete. He went through a lot of socks and I would throw them like with just in the washing machine with everything else,
Hmm.
which is fine, right? That's what you do naturally. You don't even think
I
about it.
throw. You don't want to talk to me about laundry. I throw everything in the same thing:
There
colors,
you go.
whites, everything.
Darren, I teach you a little trick. When you hang your socks up, hang them in pairs. So do it right immediately. Do
Hmm.
it right the first time. Hang them up in pairs, and then you can put them in pairs together into the drawer. Because here's the thing, it saves you so much time. When I started out of fun, right? It was just a silly thing to do. But out of fun, I started reading my time on how long it takes to find two matching socks when the socks are just messy in the drawer. Do you know how much time we waste in the morning?
I do. Half the time I'm not wearing
Yeah,
the same socks. I just grab them. So
I love that, right? So you found a great solution to how do I stop wasting time and don't need to do all this being, organized with my socks. But that's just an example, a silly example of how traders also have to start thinking about um, the markets. Like a stop loss is something that gives you more freedom. Routines and planning gives you more freedom, but our initial experience is that we have a resistance against it.
yeah, I like that.
So,
Instead of it being, a lot of people think it being a roadblock or something, something
yes,
that's holding them down or dragging them down. But instead, it's a tool to make sure that you're more profitable and that you're making the right decisions and you don't dig yourself into a deeper hole, which a lot of people do.
exactly. And always do this exercise with my traders. We go through their trades. With AI, we can do amazing things nowadays. We take their trading over the last year and we looked at how would your results be if you had kept to 1 or 0.5% stop loss. I tell you, every one of my traders would be so much more better off if they had done that. But this is the kind of work most traders don't do. And that's why they don't understand how powerful stop losses are.
I definitely, when I was saying I did day trading back in college, didn't even think about stop losses. I was like, why would we put a stop loss in? All we do is win, you know?
Not fun, right? Yeah,
No, it's
exactly.
not
All we do
fun.
is
Stop
win.
loss, and then in my head, I was like, if I put the stop loss in, then I'm just securing a loss, right? Like if I put the
Yes,
stop loss in, then I'm just solidifying that I have that loss. But if I don't,
yes,
then I could maybe wait a little bit longer and it'll go back up, or at least maybe I can make break even. But most of the time, I just keep seeing it go down and down and down until I panic and then I sell, and I might have sold 3x less than what the stop loss was, and now I'm just in a bigger hole. And then now psychologically, I'm like, I need to make a bigger win. So maybe now I'm taking riskier positions
now
to
we are
try to
going on tilt. Yeah,
exactly to try to make up that loss that I just took.
yes.
And of course, with those riskier positions, why would I put a stop loss? Because I'm trying to make up
Yeah,
what I lost already. So
I can fix it. I can fix it.
I can
No.
fix it. Exactly. And
Yeah,
the next thing you know, you look back and you're down thousands of dollars. And what did you learn?
yeah.
Use a stop loss.
And I love your example because that's exactly it. It's not necessarily that something is wrong with the trader in terms of mindset. For many, there is trauma, and
Hmm.
that trauma needs to be addressed. But for many, it's also the way of thinking about the situation. My socks example is a really silly example, but it really beautifully illustrates what you just said. Why would I spend that time sorting my socks? Why would I take that stop loss? And in my mind, it was like I'm giving money away instead of making money. And
Yeah.
starting to think about it differently. It's all in the thinking, Devin. So that's the second big topic that I see with my traders. The way they think about risk management, about trading, about entries, about trading in general is not helping them to succeed. So they have to learn a complete new way of thinking. I was really excited when I saw in your challenges the 2-to-1 challenge. Can you
Hmm.
explain to me how that works?
Yeah, of course. So the 2-to-1 challenge, I know obviously you're familiar with prop firms and stuff. So just like a prop firm challenge, you have to get a certain amount of profit before you hit a certain amount of loss or drawdown. But unlike a prop firm, if you lose, you don't just it doesn't feed into that. I spent $500 on a prop firm challenge, I lost. Now my only way to go back is buy
Yeah,
another $500 prop firm challenge. We have 2-to-1 and 3-to-1 challenges, and with those challenges, essentially, let's say you buy the $5 2-to-1 challenge. Sorry, I just wanted to look at it, make sure I had the numbers right here. But if you buy the $5 2-to-1 challenge, and you get 10% profit before you get 5% drawdown, your $10 now turns in, or sorry, $5 now turns into $14. So you make an extra
amazing.
$5,
Yeah.
$9 in profit.
And
Um,
I love what you just said because what you are doing is you reward good behavior. And
exactly,
with a prop
exactly.
firm, I'm generalizing here, there's really good prop firms as well. Like, the guys from Forex Analytics, Blake and
Hmm.
Dale, those guys, I absolutely love them. But most prop firms, they are working against the trader. They're punishing them for trying to do the right thing. They're triggering the fears. And have you
Hmm.
heard of something like anticipatory dopamine? Because I think you studied psychology, right? A little
I
bit.
have, yeah, I've heard of that. It's a lot in gambling. That's really big in gambling as well.
Exactly. And that's the same in trading, right? So
Hmm.
here we are starting our prop firm challenge. We are so excited. We see our big future. And
Hmm.
then we get punished for making a mistake. We lose the challenge. Now, the reason why traders get so addicted to getting right back into a new challenge, like I have traders who spend like $20,000, $30,000 on those challenges in a year.
I've seen people spend. I look working here and being able to see kind of some back ends and talking to traders. I've heard of traders spending closer to 100,000 in a year on
Really?
because you got to think there's some challenges. If people are trying to get $1 million funded account, they're spending ten
Yeah.
thousand dollars. So it's like you
Wow.
you get 4 of those, 5 of those wrong, and you know, some people grew up with money, or they just have a
Yeah.
disposable income and they want to get into trading. And you know, I think, well, you know, on the psychology aspect of it, I never realized the correlation between people who, especially new people in trading and gambling,
Mm.
because if you
Yeah.
don't trade correctly, it can turn into gambling very
So
fast. And
quick.
especially with, you know, prop firms in general can be a very, very good tool, right? They can give people a lot of capital, you know, with very little input in the beginning, just the cost of the prop firm challenge. But, you know, at the end of the day, the way prop firms make money is people failing challenges. So it really, like you said, it's more of the prop firm versus the person when people are failing challenges. And especially if you're a new trader and you're into that mindset of like, I have the right strategy, it just isn't working right now, so I got to keep trying, and you're not really back testing, you're not doing all these other things to make sure that your strategy is actually working. Now you're just in a cycle of gambling. And that's one of
Yeah.
those that's something that's really good about our challenges is, yes, there's still a cost, and we have that cost because, of course, when you pay something, now that's some sort of incentive, right? You have $5 on the line. I
Yes.
think our biggest challenge is $100, so you up to $100 that you could put on the line for the 2-to-1 challenge. But it's not something that's gonna, you know, that's gonna
It
kill you.
doesn't trigger the
And
fears. It doesn't trigger the anticipatory dopamine. It doesn't trigger
exactly, and it's
frustration and
better than
unfairness.
like a demo account. It's better than going
Yeah.
on, let's say, TradingView or any of these other, you know. And those are great. Like practice, just paper accounts are
They have their
great.
space.
They
Yeah.
have their space, but there's nothing on the line, right? There's nothing, there's no, you didn't put anything into it and you're not getting anything. With the challenges, it's a small entry amount that you can do all the way down to $5, and there's a prize. So you're like, you know, you're practicing,
Yeah.
you still have something on the line, but
An
it's not going to,
incentive, right? Yeah.
exactly, you have an incentive
Yeah.
to win, and you have something that you're risking, but it's not going to break the bank. It's not going to be, you know,
Yeah.
it gives people who are in those prop firms buying 10 challenges a year, you know, wasting thousands of dollars trying to improve their strategy, gives them the place to just do the same thing, practice on a much
Yeah.
smaller scale. And the great thing is, when we actually first launched our challenges, we had a gentleman, I think he lived in Romania, and he won like 4 or 5 challenges. He did a bunch of trading competitions, didn't do so good in the trading competitions, and then I did an interview with him, and he told me that he was just practicing his strategies in those competitions, dialed it in, and then hopped in the challenges, got a $5 challenge, he won $14, and then he bought a $10 challenge, and he won $28, and then he bought a
Yeah.
$25 challenge, and he just kept moving up. And then eventually he had 700, because he did a couple $100 challenges, he had 700 and something dollars that he cashed out, and he
Amazing.
went and bought, I forgot how big the account was, but he said he spent $500 on on a challenge with a prop
Mm.
firm, and then he got funded. And then now he has a couple $1,000
Yeah.
funded with a prop firm. He's trading there, and
Yes.
I believe I did reach out. I think last time I talked to him was like 2 months ago, and he said he got his first payout with that prop firm. So
Wow. Amazing.
it's like, you know, you can go from somebody that maybe is, you know, a little, knows a little bit of
Mm. Mm.
about trading, but you know, if he would have went to a prop firm, he probably would have wasted a couple $100, if not thousands of dollars. But instead, he went to a place, he practiced in our free competitions, dialed his strategy in, and then went into the challenges, practiced a bunch of those challenges, and then now look, he's a funded trader. And you know, I feel very
Yeah.
confident he's on his way to becoming just opening up a brokerage account with what he makes.
So
So
good. So good. Yeah,
yeah.
I also know quite a few traders who have like, 20 prop firm accounts and are doing
Mm-hmm.
extremely well, but they already knew how to trade beforehand. And what I
Exactly.
see, a lot of traders use those prop firm challenges, telling themselves that they're using it to practice trading. But the amount of traders who come to me and say, I was just 200 or $100 away from passing, and then I
Mm-hmm.
messed it all up. And it's like, I understand.
Yeah. Yeah.
And this
You
is
know,
not real in trading. Like, we don't have this pressure in trading. This is a made up, or, don't get me started on this drawdown on unrealized profits.
yeah,
My God, I
that's
had a rant
crazy.
on LinkedIn, right, about it. This is just not
Yeah.
fair.
It's and then, well, because, and that all goes into the fact that with prop firms, it's the prop firm versus the trader.
Yeah,
With BullRush, it's the trader versus other traders, or the
yeah,
trader with the challenges, the trader versus themselves. You know, and
yes.
I talk to people all the time, and I make this comparison. I talk to people all the time, new traders who, just like you said, they go to prop firms to practice trading, but they're wasting hundreds of dollars practicing trading, right? I
Not the
don't
place
gamble or
to
anything.
practice. Yeah,
I
go
don't
there when
gamble or
you know your
anything like
stuff.
that. Yeah, I don't gamble or do anything really. I do like to play poker, right? That's my guilty pleasure. I play poker every
Ah,
once in a while. But what I tell people is like, I know how to play poker. When I first learned how to play poker, I was playing on free, free apps, free sites, playing with friends with for no money, not risking anything and learning.
mm,
But like the comparison there is like if I was like one of these people going to a prop firm to learn how to trade, it would be like if I went to straight to the casino with the best poker players and I went in to try to learn how to play
yeah,
poker by playing against them with real money, and I would obviously lose all my money.
I
And
love
it's the
that
same thing, but
comparison.
but instead, what I do is I go on free poker websites. I learn how to play poker. I learn how to do what the river, the flush, all that stuff is, and learn the card strengths and stuff like that, and pair strengths, and then I go to a real casino, or then I go online and play with real money and stuff like that. But, you don't go right away to the sharks. You don't go right away with the in the big leagues and trade, especially where you're paying hundreds of dollars
Yeah.
for those.
And additionally to the fear of losing money, it's the fear of losing the prop account. So there's an additional fear that is being introduced into an area that is already uncertain, that is already triggering a lot of our fears
Mm.
artificially. But
So
yesterday I was I was doing some presentation for someone, and one trader asked me, and it was a really good question. She said, there is so much information out there. There is like, YouTube. And when I started, there was no internet, that's how old I am. But now there's just like YouTube channels and Twitter and LinkedIn, like so much available. And she said, "How do I figure out what is the right thing? What is the right training? What's the right market? What do I do?"
mhm.
And this is also something that a lot of people underestimate. Know who you are. When I'm saying know who you are, I'm not like in terms of how Plato meant it. I mean like, how do you naturally make decisions? What are your fears? How are your coping mechanisms? What is your strength, right? So I'm not good at maths. Like I can't trade options for my life. And by the way, my first trading course was an options trading course. No wonder I couldn't make it work because I have no brain for mathematics. I
Yeah.
failed maths, and it was so funny because my university professor, he gave me 1 point as a present because otherwise I would have failed my exam. And he called me and he said, "Look, you in mathematics, you have to promise me not to go into that field. I pass you because I don't want you to fail your degree, but not your thing," which was not very inspiring, but that's maybe how I developed a limiting belief. I don't know, but
Mhm.
it doesn't matter because my strength is I'm super visual. I can read charts like a world champion. So options trading, it's too much mathematics. That's how you can already start identifying what kind of brain do you have. If you're good with maths, well, try options. It's amazing. What is also helpful is understanding if you are someone who makes decisions really, really quick. So going back to the disc profile, the high Ds, the high Is, they're making decisions really quick. Then you can trade shorter term strategies. If you are someone who's more of a high C and a high S, then you are most probably someone who takes a little bit of time, who needs to think about things, who wants to check the facts, and you don't make decisions quick. So don't learn a scalping strategy. I work with a trader who is a very, very successful entrepreneur. He built a company up to 8 figures. You can imagine he's a visionary. He's a big picture thinker because you can't build a company if you're detail focused. You have to have your support team who looks after the detail. And
Mhm.
he studied L. Brooks's price action, which is great, right? I love L. Brooks. He's amazing, but not for him. He is
Yeah.
someone who sees big picture movements. One candle by candle does his head in and didn't bring out the best in him. So it still wasn't wasted, right? It still helped him to make really good decisions at the point of entry. But for him, we changed the approach. We looked at bigger picture scenarios, and it changed everything for him. It really brought out the best in him. So we need to know this kind of information. There is heaps and heaps of self-analysis tools already on the internet. That's the very first thing that I do with my traders
Mhm.
as well, so that I get a very objective insight into their strengths and their weaknesses and what we need to work on, what their potential pitfalls are. For example, high eyes, or someone like you and I, who love people, we would be more prone to letting losses run because there is a lot high component of emotions. The high Ds, not so much, but they're really good at cutting their losses. And they're like, what is wrong with those people who can't take their losses? I don't get it. So they don't
Yeah.
understand what we go through. So when you know what your potential challenges and weaknesses are based already on those insights and understandings that we have from those tests, then you can manage yourself with a well-being approach when you say, this is my weakness, I need to start practicing that first. If I were to start trading, the very first thing I would then do is practice accepting the pain. Because what is it not wanting to take a loss? It's resisting the pain, isn't it?
Yeah. Yeah.
And then what you did as well, change your relationship to the pain, because the pain will never change. It's never fun taking a loss. But when we
No.
change our relationship to it, then it becomes doable.
Yeah, exactly. Like you said, I mean, I had the pain, and I mean, what I did was I stopped trading altogether. Besides, having my long-term investments, I did stopped all short-term day trading, swing trading, weekly, any kind of trading that
Mm,
wasn't for retirement. I stopped for probably like 6 months, and I just tried to learn as much as I could. I looked at what I did and try to see there what I did wrong and what I did right, and just talked and watched. I just watched my friends trade, the people I knew that were actually
amazing.
successful. I just watched them and to see what they did and
Great friends
compared
to
it.
have, Devin.
Yeah, yeah. I mean, not all of them were good. I watched a lot of losses too, but I tried to focus on the people that were doing good. So we talked a lot
You,
about.
you know, I disagree here, Devin, because there's so much, disagree is the wrong word, right? But I want to encourage you to look at this also from the point of view, learning what not to do.
Learning from other people's mistakes. Yeah, that's a good point.
Yeah,
That's a
yeah.
good point. Yeah.
Because if we only look at what has to be done, we are missing a really big part of learning where we can see, just like, the not taking losses. When you see someone going through the pain of staying
Hmm.
up all night, we have all done it, right? Like, I
Yeah.
don't know one trader, even my seven-figure traders, everybody has done it at some stage in their trading career.
Hmm.
No, this is not how I want to live my life. This is not how I want to trade. So that will also help you to improve learning how not to do it.
Yeah. We talked about what a lot of people do wrong and what, new traders should look out for doing wrong. But what are some psychological patterns that you see in successful traders or throughout successful traders?
Yeah. Um, it's always the same. So number one, every trader is different how they do things. So there is not one uh, cookie cutter, this is how you are a successful trader. It is very, very individual, but we can work with frameworks. So, for example, when you learn from other traders, don't look at what they're doing. Look at how they're thinking about the market. Look at how they're thinking about taking losses, about risk management, look at how they're thinking about when to exit a trade. So quite a few traders come to me, especially newbies, and they're like, "Oh, there's something wrong with me. Can you help me fix my mindset? I don't take my profits." And then we go into their, how do you know when it's time to exit the strategy? They don't have a really clear exit strategy. It's
Yeah.
like, it's not your mindset. Let's find a really good exit strategy for you, or something similar where traders find it hard to distinguish between reversal and retracements. So they think it's a reversal, they get out, it was retracement, the market continues on without them, and then the resentment starts, and then they're going on tilt. So the problem was not going on tilt, the problem was not reading reverse retracements versus reversals correctly,
Yeah.
missing out then, and that triggered whatever fear and whatever emotional roller coaster. So number one, these traders who are doing well, they just really know their craft well. There's no way around it. And anyone who trades less than a year, You can't know everything. There is so much to know because the market is just every day something new. And that's why we love it so much, right? No double
Yeah.
top looks the same.
Exactly. And that's why a lot of these courses that you said you did, or the lectures that you said you did when you first started trading, and I did when I first started trading, they
Yeah.
all market it as do this lecture, do this course, and
Yeah.
you'll be
Do this
rich
one
in
thing.
2 months. You'll
Exactly.
be rich in 3 months. One thing I've learned, I'm young, I haven't lived on this earth for a long time, but in the time I've lived here, I've learned one thing. There is no way to get rich fast unless you're
Yeah.
born rich. Unless you're born rich, that's the only
And
way.
yeah, anyone who has this kind of marketing with Ferraris and pretty women and
Mm-hmm.
so on, run.
Run, run. It's rented. It's rented.
Yeah,
The helicopter is rent, or they're making it from teaching you. You wouldn't believe how many
exactly.
people out there are like trading influencers or educators and stuff like that,
Yeah.
and they're like, "Oh, look at my Ferrari I made from trading." They didn't make it from trading.
No,
They made it from
no,
selling a course to you.
exactly. It's easier to make money from education than from trading. That's the
100%.
reality. But who wants to be a salesperson? Everybody wants to be the race car driver, right?
Exactly.
Who wants to
Exactly.
be the car salesman? And the thing is, what we also need to understand, like I saw one of those educators on Twitter, and he's like, believe in your dream, you can do it, you can be a successful trader. And I thought, says the person who makes the money being paid by a very big company to put out those tweets.
Exactly. Yeah.
So
And
let's
don't get me
be,
wrong, there's good
yeah,
educators out there. There's people
yeah,
with good courses and stuff like that,
yes,
but there's a lot of not good that you have to weed
yeah,
through. There's I mean, I've had other people on the podcast here who have their courses. I mean, you have your consulting in your course, and there's a lot of great information out there. You just have to weed through and pardon my French, the bullshit. You have to weed through the
yes,
bullshit to the good shit. And once you get to that good stuff, then you can learn. There's a lot of people who are just selling a course that you can get for free on baby pips, but there's a lot of
yes.
people out there that have real substance. Excuse me, they have real substance, they have real information and really good stuff to provide to you, and you just got to find those people
Yeah,
like
I guess
yourself.
in a nutshell, the way you find it is by not falling for those marketing messages because we all want it easy, right? It's like the get Ozempic and lose weight. Yes, you lose weight, but on the way you lose your eyesight, we had, cases recently in Australia where people lost their eyesight through Ozempic and your liver explodes and horrible stuff happens. It can go right, but
Yeah,
there is no shortcuts. So this is how you identify someone who always wins, not possible. One of my best
exactly.
traders, high seven figures. So his profit loss ratio is about 35-40%. So only 3 or 4 in 10 trades are profitable. When you have someone on YouTube who always wins, they have had 10 trades, but they only post the one that is successful. One of a trader contacted me and said, "Oh, you check out this guy on Twitter, and he nailed the top in the Nasdaq." I'm like, how many times did he try to nail the top at the Nasdaq, but only posted the one when he actually nailed it? Right?
That's so funny you said that. My last interview I did was with a gentleman, and he told me the same exact thing. He's in the seven figures in trading, and he said exactly what you said. His P&L is 30% for profit
Wow,
loss, and
yeah,
I was
all of
like,
them. Yeah,
I was shocked, and that was the first time I heard it, and I was like, what? How? But it's just because you got to make sure your wins are way bigger than your
yeah,
losses.
yeah. And
Yeah,
just
and
because
that's
I
where
have
stop
never,
loss comes in.
yes, exactly. That's the other thing. I
Yeah,
just because I never have met anyone doesn't mean that they don't exist, but I've never met anyone who has more than a 50% profit loss ratio, maybe 55, 60 under special market circumstances because, P&L changes also in different markets, of course. Never met anyone who has an 80 or 90% P&L and makes millions of dollars in trading. Never. But they still can be out there just because, you don't see the moon now doesn't mean that there is no moon. But that tells us something. Now you mentioned stop losses. That's the next thing. They all. So my favorite story is that this trader, he hates taking losses. He hates them with a vengeance. And that's why he takes them really quick. And then I have another trader or many other traders that hate taking losses. And that's why they don't take their losses. So you
Makes
see, you
sense.
can funnel and use your hatred. It doesn't always need to be positive and kumbaya. You can use your hatred or disdain for something and turn it into your superpower. And he
Exactly.
rather misses out on a profit than letting his losses run. And he's left plenty of money on the table. But it also has helped him. He's trading for 15 years. It has given him longevity. And that is something that they all have in common.
Exactly. And that reminds me of something I saw on your website, tradingpsychology.com.au. You said that most traders think success is based on your wins, but the truth is how they respond. The truth is it's how they respond when they lose, which I think
Yeah.
it really made me sit there and think a little bit about that. I think that's really good. So how do you think traders should handle their losses to best set them up for their next win?
So what a lot of traders don't do when they develop their risk management is they don't understand the strengths and the weaknesses of their system, of their strategies. If I had to start again, and I didn't do it either, if I had to start again, I look at trading like sports. I had for many years, I had problems with my back and no one could fix it just because I didn't find a um, good, physio, osteo. I've tried them all, chiro, right? They all just
Yeah.
put me on the table and no one really fixed anything. They just give me a little massage. And then I found one guy and he immediately helped me. He did not work on my back. The problem was my shoulder and my hip. PSOA, PSOA, or whatever it's called, is the answer here. And he fixed me in a month. But I had like 6 or 7 years with no sports. So
Hmm.
I started getting back into sports, and he's also a personal trainer and just really understands the body. And the first thing he did with me, developing my core and my glutes, because it was like zero. Our risk management is like core and glutes. When they are strong, everything else will be even stronger. If you don't have a strong core and strong glute, but you have strong arms and legs, you still hurt yourself. So that's why I would do it like when you build your body. You start with risk management. In order to have proper risk management, you need to understand what are the strengths of your system. Every one of my successful traders knows that. I have gone back and like, for example, Linda Rushke, market wizard Linda Rushke, who's a friend of mine. She's just amazing. She's done so much modeling. The reason why she's one of the most successful traders in the world is because she spent so much time thinking about, okay, so what happened, not thinking, but doing research into what happens after the first 15 minutes.
Yeah.
What are the statistics? What happens if it was a bull candle versus a bear candle? What happens if it opened with a gap down or a gap up? All these different varieties of what happens after the first 15 minutes, she studied that, and that's why she knows the market so well. And when you know your strategy so well, then you can build your risk management around it. So, for
Hmm.
example, I love my double tops and double bottoms. I'm very traditional, When I started trading, there wasn't much more around. Now we've got all this crazy stuff in terms of trading, but they fail. I studied when do they fail?
Yeah.
Well, they fail in strong uptrending markets, don't they? And I learned my lesson in 2016 when there was a strong uptrending market and all reversal patterns failed. Trump market, right? Now
Oh
it's the
yeah.
other way around.
Yeah. The
And
reverse Trump market.
yeah, exactly. Love it. So I realized that I needed to add more strategies or continuation pattern to my toolbox. Now, when you know what the strengths of your system is, then you build your profit targets accordingly. When you know what the weaknesses are, you build your stop losses. So very simple. And I learned that from Linda. It's such a simple way of thinking. So when I have a double top, the way double tops fails, and by the way, I don't enter traditionally at the neckline because my stop loss is too high. I can't deal with that. I'm too emotional and I don't need to, right? So I want to see a candle reversal pattern. Surprise, I'm a more detailed person. I want to see a candle reversal pattern on the second top. But when the double top doesn't play out, it's usually because it turned into a triangle pattern, which is a continuation pattern. So my stop loss gets taken. Now I have a long entry. See how I can build my risk management now around this knowledge of my strategy when it works and it doesn't work? Most traders don't do that. Now, the second part of having a healthy athletic body, and I'm still working on that, but it's mobility.
Aren't we all?
Aren't we all, exactly? It's mobility. So mobility means that when I stumble, I don't fall.
Mm-hmm.
Mobility in trading, what is that? Well, it's messing up and then not getting triggered emotionally. Or if you get triggered emotionally, you can regulate your emotions really, really quick. You can start focusing on your job really quick as well. So in sports, we call it a recovery rate. So someone falls over in a marathon run or sprinting, they get up straight away and still win the race.
That's a great analogy. I like that.
Yeah. And then flexibility is super important for the body. For example, one of the things that my osteo found out alerted me to was I have a very tight lower back. I couldn't squat, like the Asian squat, I couldn't do that. That's a sign of lower back. And then you get neck pain. Then you get eye problems and so on. So we practice doing squats. I can squat like a world champion now. That helps with my neck, especially being on the computer, having all these monitors here.
Yeah.
Yeah.
I get bad neck pain.
There you go. Practice squatting. So flexibility in trading is what? It's knowing when to change direction really quick. That you can be someone who trades long, who trades short, or who trades sideways. Now you don't have to. One of my traders who is also a 7-figure trader, he only trades long because he's works in a hedge fund and he is only allowed to go long because of the hedge fund. 2008 was his best year or one of his best years because, when we have bear markets, the little retracements, they're just massive. They're very powerful. He nailed those. And he made 20% return that year, which is really big for a hedge fund trader, right? They deal with different numbers, so 20% for them is massive.
Yeah.
Yeah. So that is also something most traders want to make 20% a day. These guys make 20% a year.
Yeah.
Different numbers.
No, it's you got to look at that. But the people that are trying to make 20% a day, maybe they make 20% one day, but they lose 50% the next day, and
that is
they're only focusing on that 20%.
Yeah.
We're coming up a little bit here on time, but the one thing I saw on your website, and I think it's your tagline, is an odyssey into pain, suffering, and triumph. I love that. Can you tell us like a story about yourself, or maybe with a client that illustrates that journey, and maybe elaborates a little bit more on that? Because I think that's a great, not just in trading, but in life, that's a great tagline for life.
It's so funny when traders come to me and say, I love trading. And the next sentence is something that they're so much in pain about. I lost this money. I just can't believe it. I will never make it. And I'm such a loser. And all this self-judgment comes in. So hang on, you just
Did you hear me talking to my wife? Did you hear me talking to my wife?
Yeah, your wife sent me a message beforehand.
Yeah, I think so.
Pull Devin up on his self-talk.
Yeah. I think you quoted me word for word there.
But it really is like that because, we deal with money here, and money is really important for our survival. Money is also important for our emotional survival, like our standing in society and so on, how we can live and experience life. What we said at the beginning, wanting to take the partner to an amazing overseas holiday or making them happy. There's a lot at stake around money for us. So unless we have dealt with our relationship around money, with money, that will be a really big pain factor. So a lot of traders, and again, we can use our harsh experiences growing up or, even later in life and use them as a catalyst to do well. It doesn't always need to hold us back. Dr. Gabor Mate coined the term post-traumatic growth. I think it was him, versus post-traumatic stress.
Yeah,
And
taking a
he's all,
fear and turning it into something positive. So his fear of
yes,
losing, and then he takes that fear of losing and makes it into something positive that helps him just secure more profit and more wins in the
yeah.
long run.
Because look at it, what is our deal in trading? We need to take our losses quickly. And Sir John Templeton had this beautiful quote, which is one of my favorite quotes, applicable to anything in life. Most traders lose money in the fear of losing money and trying to avoid losing money.
Yeah,
It's the same in relationship. Most relationships don't go end well because one of the partners has the fear of losing the other partner. They try to avoid losing the other partner, so they become subservient or they become overly aggressive or whatever their coping strategy is. And then the partner is like, you're not the person that I met, and runs away. So the fear of losing has been exactly created by how they deal with that fear.
yeah.
And it's the
The
same in
grass isn't
trading.
greener. The grass isn't greener on the other side. The grass is greener where you water it.
That's exactly it. I love it. I love it. So many examples I have where traders had traumatic experience, and trauma doesn't always need to be something big for us adults, but for the child, it was something big. A trauma is always created when something happens. The child or the person doesn't have the mental emotional capacity to process it, and no one was there to help them through. That's the definition of trauma. So something really horrible could have happened to the child, but there someone helping them through it and helping them develop the mental emotional capacity. But who had that? Like kids nowadays are luckier because parents have the internet and so much support. At my time, that wasn't available. So most traders who don't want to take a loss have that fear of taking a loss out of a negative experience in the past. And all the pain that a trader experiences in trading has nothing to do with the markets. It always is a fear that has been triggered of creating the same painful experience that they had as a child. So the way our brain works is at any moment in time, like even right now, our brain would go back to the past memory bank and checking, are we in danger? Are we in danger? Are we in danger? Yes, we are in danger. Panic attack. The amygdala takes over, freeze, flight, on being paralyzed, not being able to press that silly mouse button, right? Which is not a big deal actually. So all of that can be worked with. May it be that a past experience needs to be readdressed and the memory of it needs to be reprogrammed, because the memory, when it's being reprogrammed, then we can look at new mechanisms to deal with those situations. But if the unconscious fear of losing everything and ending up the way you ended up as a child is so overpowering, we don't have the mental capacity to look at a solution to deal with a problem. And for other traders, it's something more simple of, practice retracement versus reversals. And then you will be so much better at taking your profits really quick. And here's the other thing, right? Perfectionism. Perfectionism is also, how many traders email me and say, I didn't get out at the top of my trade. So what? That'll do, pig. Leave some for others on the table.
Yeah.
Take whatever you need, and they behave as if that was the last trade ever
Be
that they
happy
would
with
make
the win that you
profits.
have. Don't be
Yeah,
mad about shoulda, coulda, woulda. I could have made more. Be happy that you did make more. Be happy that you didn't
yeah,
lose.
exactly.
I really like that. So essentially, then an odyssey into pain and suffering and triumph is, turning that pain and suffering into triumph, and
Yes.
and
So
turning it,
healing the
turning the
pain,
negative into a positive, healing it.
releasing the pain, that's what the negative turns into a positive. And then you trade, you don't have any emotional upheaval anymore. That is true freedom, Devin.
Yeah, That's beautiful. I really liked. I saw that, and that really hit for me. And I'm all about turning a negative into positive. And I think that
Yeah.
everything happens for a reason. Even the most negative things in life, I think they have a positive connotation or something positive that can come with that. And thank you. This has been a really great conversation, and I really hope we have a part two soon because I have a lot more questions for you, and I have a lot more that I think we can talk about here about this. Is there anything else that you wanted to tell the people right now until we have a part two?
Well, I always say, and again, using Linda Rushke, she's got an amazing YouTube channel, and her book, Trading Sardines, is a book where she talks about all the challenges that she had in life and all the mistakes that she made, and she still came out as one of the best traders in the world. Every successful trader has a dark past, and every losing and struggling trader can have a bright future. And that is always something that I like to impart on my traders. Trading is not rocket science. In my opinion, anyone can learn it, but it's about learning to deal with all the emotional upheaval and the tricks and the traps that our brain creates and holds us back. But it can be learned to deal with. So it's the best journey ever and the best job in the world, Devin.
Yes. Well, like I said, I had a great time talking to you. I learned a lot. I love the psychology aspect of trading, and I've learned a ton about psychology and trading when working here. Like I said, I hope we can have a part two because I have more
Absolutely.
questions for you, and I enjoyed this conversation. And
Anytime.
I know the people will want to hear more from you. And make sure anybody watching, click. I'll have all of Mandi's links in the description here below. So make sure you check those out. Make sure you go to tradingpsychology.com and highperformancetrading.com.au to check out all of those links and become a better trader. Dial in your trading psychology, dial in your mindset, and become more profitable. Don't buy those fake courses. Talk to real people, talk to real traders, talk to people who know what they're talking about.
By the way, the
Yes.
guy that I did my first course with, it turned out that he was just a great marketer. He had actually copied the course word for word from one really great trader here in Australia.
Yeah, exactly. Well, thank you so much, Mandi. It was a pleasure having you on here, and I can't wait for the next one. Like I said, everybody check out the description for all of Mandi's links. Check out her YouTube and her Twitter, and I'll see you guys in the next one.